Hey everyone, Coach Investor back to another video for you today. So let's talk about Disney. In my opinion, the company has lost its magic in recent years. And this is coming from someone that grew up on Disney animated movies, someone that loves Marvel and doesn't mind watching some Star Wars movies. Of course, Star Wars, Marvel are acquisitions, but I've been a very hardcore fan of the core Disney brand. But in recent years, as I've been saying in the last couple of videos, well, actually for a while, I've been feeling a disconnect, and I'm sure a lot of Disney fans have been feeling that disconnect as well. And this is why I have no shares in Disney today. If you've missed the last two videos, I said I sold all my Disney shares before the earnings report. You might say, great timing, great move. Yes, I thought so too. But the thing is, I sold and I put it all into Tesla, which was just under $200. Of course, Tesla shares dropped even more. So it's not like I was like a brilliant trader and timing. No, I just didn't want to hold shares anymore of a company I didn't like anymore. And that's about it. Now, does that mean that this video will be bearish and that's about it? No, but we're going to talk about some bearish points that were made during the call, what analysts are making after listening to the call and reading the earnings report. And I want to point out some numbers as well. So if you enjoy this type of videos, leave a thumbs up and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So the first thing I want to touch on is with regards to profitability, something that was mentioned during the earnings call. So they're saying here, assuming we do not see a meaningful shift in the economic climate, we still expect Disney Plus to achieve profitability in fiscal 2024 as losses begin to shrink in the first quarter of fiscal 2023. This quarter was Q4, unlike many others where this is still Q3. So they are already right now currently in Q1 fiscal 23. And then a bit later during the call, they got asked again with regards to direct to consumer profit 2024 guidance. So they say here, we've talked in the past that this means probably a quarter or two in 2024 and not for the full year, which got answered. So direct to consumer for 2024 profitability, you should be thinking about it as a quarter, not a year basis, which means this might only be 1 quarter of profitability, and that's about it. And even that may be questionable right now. And then on some of the profitability drivers that we talked about that I think answered the question about the economy, we do have things like the steady state of content on the service that's independent of the economy. And yes, Disney does have, a big slate of movies coming out starting next year, Marvel Phase 5, then some other remakes of some old Disney movies, which again is very questionable. Why start remaking old movies that shouldn't be redone and then changing the major plot and characters to fit the current political image of stuff? Doesn't make any sense. Anyways, there's still a lot of positive things and positive momentum for Disney going into 2023. Lots of new movies. I see Disney parks worldwide should be open everywhere, especially with the current struggles in Asia. That was not always the case up until now. So we might be seeing some better days ahead. But costs do have to come down. And of course, like with every other company out there, they are also trying to reduce cost across the board. And so we do have to talk about the numbers for this quarter. So revenue grew 9% year over year. Income from continuing operations before income taxes, that grew 30%. Now total segment operating income only grew 1%. Net income from continuing operations, so all things included, that only grew 1% as well. Diluted earnings per share excluding certain items decreased 19%. Cash provided from continuing operations decreased 4%, and free cash flow also decreased 10%. And this is one of the reasons why actually the stock went down quite hard, because they're missing that profitability aspect that, maybe lots of analysts were already expecting right now. And what made the big difference here? So if we look at segment operating income, we can see here that Disney Media and Entertainment Distribution, that's down 91% year over year. But of course, now you have the parks back again, so that's up over 100%. So overall, we've got that just 1% increase here. All right, so now when we talk about Disney, obviously the main focus point is on Disney Plus, Hulu Plus, ESPN, etc. So just like with Netflix, they're looking at the amount of extra subscribers. In this case, also extra subscriptions, because that's the main difference between Disney and Netflix. One focuses on subscriptions and the other on subscribers. So overall, Disney Plus increased 39% year over year to 164.2 million. Now, the big increases, as always, comes from Disney Plus Hotstar, which again, monetization-wise, not great. We're going to have a look at that in just a bit. But if you look at international, so that's excluding Disney Plus Hotstar, that grew 57% year over year, so quite nice there. ESPN Plus, that grew 42% year over year, and then Hulu, if you look at SVOD only, grew 8%, Live TV plus SVOD 10%, and then the overall Hulu grew just 8% as well. But now, if we look at the monetization part here, you can see that Disney Plus domestic US and Canada decreased year over year 10%. Internationally only grew 4%. And I mean, look at the average monthly revenue paid per subscriber. Compared to Netflix, this is nothing. Disney Plus Core decreased 4%. Disney Plus Hotstar, it's already so low, and they managed to, well, decrease it by 9% year over year to, well, close to $0.50. Global Disney Plus decreased 5% as well. ESPN Plus, that increased 2%. Hulu SVOD only decreased 4%. Now, Live TV plus SVOD, that increased 2%. And you can see here the power of having, well, ads added to the platform, $86.77 there. And of course, we have to talk about Disney Plus and the ad-supported tier there as well. That's coming out, so that's obviously going to drive some extra income as well over time. Same thing with Netflix. But right now, as you can see, growth is a bit slowing down when it comes to monetization of Disney Plus, Hulu, ESPN, which is not always great. Yes, they continue to add more and more viewers. But the problem here, you have to monetize those viewers because the overall cost is probably not shrinking anytime soon. And the more people you add there and you can't really monetize them as much, well, it's going to be a continued struggle. And that's why lots of analysts are questioning that profitability by 2024. And of course, it doesn't help that we're now in a semi-recessionary phase, high inflation, etc. Maybe not everybody wants to have 1 million of streaming subscriptions. So there might be some cancellation, not just with Disney, with HBO, with Netflix as well. Something to consider. And I'm sure that's probably why also the prices of Disney have not been increasing that much. There have been some price increases, but it's still not as high as the likes of Netflix, for example, which is why the ad-supported model is extremely important. So overall, do I plan on buying my shares back anytime soon? The answer is plainly no. Although I do see some upside in the long-term future because Disney is still Disney. Right now, I'm not willing to buy any shares of a company I currently do not believe in the way they operate. I'm just sorry, I'm thinking as a fan. I do not like the way Disney, well, the direction Disney is heading. Of course, I still watch some Disney movies here and there, especially Marvel. As I said, I watched a new Black Panther movie. Emotions and music aside, I think it was a bang average movie. Of course, they play on your emotions, but overall, very, very long movie, and that's about it. But I went and watched the movie, which means they got my money. And I'm gonna watch Avatar as well. I'm gonna watch Ant-Man as well, because I like movies, but overall, I'm not going to buy shares anytime soon. So those are my thoughts with regards to Disney right now. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next one. Bye bye.